Alrighty, guys, welcome to tonight's charting session. Hopefully everybody's doing well. Happy Tuesday. So today was honestly kind of an iffy day. It actually ended up being a good day for me. It wasn't on live that I really didn't get the opportunity that I wanted to. When I hopped off live this morning, I was down $400. I took two trades. Actually, I kind of took two trades in the morning that were just hesitant, and then I kind of just took off. And then I didn't really get like a quality setup, in my opinion, until later in the PM. So I took two trades in the PM session. I'm going to go over those, go over the trades today, what I did right, what I did wrong. One of the biggest things that I want to talk about tonight, and I think we've talked about it a little bit before, but the importance of when you are wrong, when the market does not provide quality opportunity in your eyes, when you end up making mistakes. There should be habits put in place, in decision-making put in place that will always protect you. And it is inevitable for you to make mistakes. I want you guys to notice and ask yourself, why do you think, what are the reasons, and what do I do when you guys watch me trade? What do I do that keeps my losses so small and makes me win big? What are the things that I do that causes that to happen? What do you think? I want to hear responses. Even when I make mistakes, my losses are significantly small. Yep, that's one. I cut early when the market doesn't give me what I want to see. Two chances for a trade. Yep. Cutting losers quick. Cut trades when you don't like what they're doing. Pyramid into good setups. Yep. Going with small size, have two chance rule. Yep. Exactly. So a lot of the time, yes, proper risk management, but let's go more in depth to that. Proper risk management as in being multiple things. Let's type this out. Hold on. My dog's going to start barking when I stop petting her, so I need to... Okay. Number one. Cutting trades when market goes against my bias. Taking this is one of the big ones. Adjusting size based on based on quality of setup, conviction with setup, time of day, news, all of these things. But most important ones of this, the most important one is this: conviction, personal conviction. When I see a setup and somebody else looks at that same setup, they're going to see it in a completely different light than I am. It's a feeling, right? And that is what you need to focus on. It is a feeling. When you see a trade, and when we all see the same trade, we're all going to have different levels of conviction for it. There's going to be days where I think, hey, this setup looks great, but I don't have the conviction right now in this moment to take it because I don't feel comfortable, right? And that could be because of outside life. That could be because of how much sleep I got last night. Those are all factors. And when you start basing your decision making off of personal conviction, based off of how you feel in that exact moment, is when you're going to get the proper rewards from it. There's times where you see me, I'll maybe take, it could be a fucking A+ setup, and I'll take 3 contracts just because I don't see it in that moment. I might see it, but not have the conviction to put on that size in that moment. And that's totally fine because guess what? I'm playing to me, right? I'm playing based off of my personal feelings, and that's how you should. Now, normally, most of the time, people are going to say, yes, you need to have no emotion. You need to be robotic. And yes, I absolutely agree with that. But at the same time, you need to recognize your decision-making effects based off of how you feel. And that's inevitable. You are a human being. You are inevitably going to make bad decisions here and there. When you start taking trades based off of personal conviction is when you manage your wins and you manage your losses. There's times where, again, like this morning, I took 3 losses. 3 losses, and I lost $400. I took 2 wins, and I ended the day up $2,700. So I made over $3,000 with 2 trades, and I lost $400 with 3 losers. And it all has to do with 2 things. Number 1, the conviction. In the morning, my conviction was skewed, so I didn't put on size. It was also the time of day. It was early in the morning, and we didn't have a clear understanding of the market. Hold up, let me let my dog out. Because this morning, the bias was kind of all over the place. We were questioning, did we want to see displacement? ES at the specific time, too, was looking through this breaker. I was expecting this to possibly get broken through right here. I was waiting to see if this would break. It was a conflicting bias. We had an SMT here, and then news ended up opening. We took this high. So the trades that I ended up taking in the morning were not as confident of a bias. So I traded lower size, which made me lose less money. Now, the difference is the times when I say, hey, this look, okay, actually, before I even get into that, oh, my mind's racing. I love this shit. Okay. When you think about trading, there's 2 ways, there's two types of traders. How do I want to phrase this? Pardon my spelling. Is it predictor? Okay, I don't even know. Whatever. Okay. Observer versus predictor. The difference in times when you come into the market and you see a setup and you say, oh, this trade looks good. I think I'm going to take this, but it doesn't look super clear. You're hesitant on it, but you can't sit still and you end up pressing the button anyway. And then it ends up failing. And then 20 minutes later, or like 30 minutes later, the actual setup and the bias that you originally had now becomes dumb clear. And you now see it saying, oh, this is what I was waiting for. And then most of the time, you don't even have the conviction to take it anymore because you're now down on the day. So now you miss out on the actual setup you've been looking for because you've ruined your conviction early on because you're predicting instead of observing. So basically, the problem that I find a lot of people have, that I used to have as well, is when you have a bias, you are more focused on that bias than what the market is actually showing you at that exact moment. Because what will happen is I'll be like, oh, I think we're going to buy side. A low got swept. Oh, I'm longing. And then I get ran through. Oh, my bias is long. This is where we're drawing towards. I'm longing. And then, intraday, and then I'll get stopped out, and I'll get stopped out. I'm like, why is the market not going to this high? Because you're trying to play this bias, and you're not observing actual price action. How many of you guys, what I just said, how many of you guys have this problem? And how often does this happen to you? Where you'll take a trade based off of a bias that's not ready, you think it looks okay, it doesn't look great, you're skeptical about it, you take the trade, you lose the trade, 20 minutes goes by, 30 minutes goes by, the actual setup happens, you see it, it's dumb clear, you don't even hesitate, you take it, sometimes you take it and you win, sometimes you're too hesitant and you don't even have the conviction to take it, so you don't take it, and then you miss out, and you get fucking angry when it ends up playing out, and then you FOMO. If this is you, you are not an observer. If you have this problem, you are not an observer. Our goal is to put you in an observer mindset. Meaning, think about it this way. The market is already programmed to move when it needs to move. Our concepts give us that leverage. Think about this. When we are looking for manipulation, SMTs, fair value gaps, anything else, how often does price go to the draw on liquidity in a confident model without doing one of those things? Not very often. And guess what? When they do happen, there's no setup. You shouldn't even be worried to take that trade. Most of the time, the market will fuck off until it shows you exactly what it wants to do, because that's why we view the market. Market maker models, SMTs, displacement, fair value gaps, when we see these things, macros, when all of the things align, it's telling you when it wants to go. When you're just trying to guess when it wants to go, it's not going to go because it hasn't shown you it wants to go. It's like looking at a fucking stoplight and pre-firing a green light and then running through a red because you know that the green is going to show up, but it hasn't shown up yet, so you're just going to press the fucking gas pedal anyway and go in the intersection instead of waiting for the actual fucking green light telling you to go. Like, think about it like that. It's just dumb. Be an observer. Your job is to observe the market, and when it tells you to go, it will go. For example, today, when we look at price today, and we were going to replay, and also this is a big problem too of being too zoomed in. When you're looking at the bigger time frame today, and we say, okay, 15-minute, our bias for today is bullish. We have a draw on liquidity. That's number one. We have a bias. We think we're going higher. Market pulls back to an order block. We're bullish. We have a fair value gap, right? We respect this area to hold. So now, okay, we're at a higher time frame point of interest that I want to see us bounce. I want to see us go here. Most of the time, are we just going to immediately rebalance and then pump? Probably not, especially when New York opens inside of a range and we are below midnight open and we're targeting Asia session high. So we're waiting. News opens. This is the first thing, okay? First going over this, because this is a whole thing in its own. 15-minute candle. Low gets taken. SMT. 10 a.m. news driver. Opens up. Pushes to the recent high. Everybody's like, oh my God. Displacement to the upside. I'm going to long this fair value gap. Wow, displacement, fair value gap. I think we're going here. No. Why? Because we're in a premium of a range. We haven't had any manipulation of the downside except for news. Once this high gets taken and there's nothing here, this is completed. Zoom out. On a bigger time frame, nothing happens here. It's simply a fucking up close candle. So, what are we waiting for? Actual model. Okay, low of day gets taken. Now what? This becomes a model in its own. This was an actual opportunity that I wanted to take. Sell side, taken. Manipulation, displacement in the range, pull back to an order block, recent fair value gap, continues to hold, gets bought up. What's your target? Scale here, and so on. But hey, when you zoom out, this is the difference. This is something in its own. When you zoom out, this move has no context because there's no displacement here. On a bigger time frame, it's still consolidation. It's still consolidation. When you zoom out to the 5-minute, guess what? There is zero displacement. There hasn't been a single fair value gap the entire day. There's not a single fair value gap formed the entire day. So then what happens? We come down. What ends up happening? Bigger time frame SMT. Oh. Bigger time frame SMT. There's more context now. What did we also end up doing this entire day that people don't realize? This is not just consolidation. What are we doing? What are we setting up for? Again, like I said, when you are in the mindset of an observer and not trying to predict, when you get chopped up in everything, you then look at this and say, oh my God, everything is, why did we do this? The entire day, we're constantly generating buy-side liquidity. This becomes low resistance. This sets us up for a move in the PM because we expect all of these highs to get ran through. So we zoom back out. Hey, what's our bias here? We're in an area in which we expect to reject order block, fair value gap, drawn liquidity is higher. We've generated buy-side liquidity to the highs the entire day. We have an SMT on the bigger time frame, not a fucking 1-minute SMT when you're like, oh my God, we have a little SMT right here. I think we're going all the way back to buy side. This means nothing. If I'm looking at an SMT right here, this is in relationship to this model, meaning this is my buy side, this is my sell side. This is now manipulation. This is displacement. Pull back to an inefficiency. Order block on a 15-second time frame. Gets bought up. This is internal buy side. This is generated buy side. Boom. This is finished. This is not. This is it. Not this is SMT. We're going fucking here. This has no relationship, right? This is fractal price. This becomes the sell side. This is the manipulation, if there is it. Generated buy side, right? This is a model. A lot of you are looking at like an SMT here and being like, oh my God, I think we're going all the way to fucking Narnia. Has nothing to do with it. That's why if you're trading internal price action and you're looking at SMTs, you have to be trading rebalances and internal price action. But now we have an SMT on the actual bigger time frame at low of day. And what is also happening here? Oh my God, the first time in the entire day that we have formed a bullish inefficiency. The first time the entire day we formed a bullish fair value gap. So looking at this price now, do you think it looks ready to go? Now, obviously, you're going to say yes because you saw the day play out. But you know by looking at this, yes, this looks ready to fucking go. Because guess what? The market showed you. The market did everything it needed to do for it to go. Because that's the concepts we trade. Market draws towards the highs. We generate liquidity. We rebalance inefficiencies. We have manipulation. When you know what you're looking for, you trust it. Trust what you're looking for. When it's not there, the market is going to fuck off. And you shouldn't be worried to try to catch moves when the market is not doing those things. So what ends up happening? Inefficiency holds, displacement. We get even more displacement to the upside. So now this becomes our market structure shift. What do you think we pull back to? Order block. I take a long. Why? Because there's two longs I took today on NQ. One right here. Targeting this internal high. Now, why do you think I took off at this internal high? And not here. Think about this. Why did I take my position off at this internal high and not this high? There's a very specific answer I'm looking for here. I need internal models, not enough. Protected high is not enough. Market maker model is not enough. Why did I take it off at that high? Because I knew something else was going to happen. And why? No, it has nothing to do with choppy price action. It has nothing to do with an SMT. Well, yes, an SMT is a part of it. Yes. Exactly. Rebalance price. If I think about this and I say, okay, at this specific point in time, right here, and I zoom out, because again, I'm trading the bigger time frame model. This SMT is here now. I know that this high to the left of me, if I zoom out, becomes my market structure shift. 5 minute. Boom. Swing high to the left of me. What happens in a model? We have generated buy side to the left of us. I'm expecting displacement through this swing high. And then what? A rebalance of price before continuing higher. So if I'm taking an early entry and I'm trading the model that is expected to break through the bigger time frame market structure shift, this is when you're aligning the bigger time frame models. If I know, hey, this is a point in time in which this becomes the market structure shift and we're going to displace through this, but most of the time if we're going to displace through this, we're not just going to go straight to these highs because we need to rebalance price first. I'm going to take that entry and close at an area in which I know we're probably going to reject before rebalancing, because on a bigger time frame, if I'm looking to take a long, think about it this way. If I'm not in a trade right now and I'm looking to take a long, everything's now happened for me to take a long. Where do you think I'm looking to take a long? Right fucking here. And guess what? What does the market do? What is our entries based off of? Why the market needs to move. So if I think I'm going to take an entry here, guess what? Price is probably going to fucking go there. So why hold my position, come all the way back down to break even, when I can take my profits right here and scale back in when I get the opportunity to do? So I make my money. I say, hey, most likely we're probably going to go back down. Now, the difference in mindset is most of you guys are looking at this being like, you're focused on the money. You're not focused on what the market is showing you. Your mindset is, this is low resistance liquidity. Why would I take it off here? I'm targeting fucking all the way up here. Because you're not focused on the actual market. You're focused on your goddamn P&L and the opportunity. You're thinking in glass half fucking full. I don't know if that's the right analogy. You're thinking in terms of making as much money as possible and instead of managing your risk. And when I'm thinking of in managing my risk, I'm saying, hey, I'm up good right now. Or I'm not even thinking I'm up good right now. I'm thinking market is going to reverse to this point in time. I'm going to take off this position and re-enter. Even if I think we're going fucking higher. Even if I think we're going higher. Why would I not take something off here if I know price is going to go back down to my entry? So I take it off at this internal high because I know bigger time frame model, this becomes my market structure shift. I expect a move back to discount of this range. One of the times in which we expect a move back to discount and not a move back to discount when there's a turtle soup. Guess what? Why do we not move back to discount right now? Or why do we move back to discount? Because there was no internal low that created a turtle soup. It was straight down. So guess what? You're waiting for an entry. Your entry is given at 50% or the order block. It's not given up here. The only way you get an entry up here is if there's turtle soup, and there was not. So we come down. I enter back in at the order block. I write it up. I take a position off. And then I had a tea time, so I took this off. Could have held this. Again, this is the entry in which you can hold. The difference between this and this, I didn't end up holding it. I should have, because this was low resistance, and I just kind of got hesitant. But this is the entry which you can hold to this high because it's the bigger time frame model. SMT, displacement, pull back to the inefficiency, back to equilibrium. There's no reason for price to go lower here. We go straight to the buy side. I'm confused. Could you please state another reason why you believe that market price would rebalance? Because market maker models. Price does one of four things every second of the day. Rebalances the equilibrium, rebalances the inefficiencies, hunts liquidity, generates liquidity. Every second of the day. Now, let's take that ideology as the market constantly does one of those things, and now let's implement market maker models. So now we have a market maker model. We have a framework as to when and why we should do one of those things, right? When we say, hey, let's now annotate this. What's actually going on here? When are points and times in which we expect the market to not do something versus do something? What does this become here? This becomes my market maker, or my smart money reversal. Smart money reversal, okay? What happens up here? Generate buy side, generate buy side, generate buy side. Manipulation at the lows, displacement, reaccumulation. What is this right here? Reaccumulation. Offering fair value. And again, what are the times in which this is a big retrace? Because sometimes, guess what? It'll do something like this. Right? The times in which we will retrace far, in this case, back to equilibrium, and the times in which we will not retrace back to equilibrium are the times in which we have a turtle soup. So, in this instance, if we were to do something like this, we wouldn't have retraced back down here because there was a turtle soup. But the reason we didn't do that today is because we just sold straight off. Again, I'm not predicting it. I'm watching it. There's no reason. I don't care if we're going to do this or we're going to fucking do this The market's going to tell me which one. So guess what? Hey, if we come back down, I take a long. If we soup, I take a long. I'm waiting for it to tell me which one. Because guess what? We just end up dumping. So we dump, and I take a long. Because that's what the market did. But it's in relationship to the model, in relationship to my already existing bias. I'm simply waiting for the market to tell me what it needs to do. I'm an observer, and I'm reacting. Does that make sense? Any questions on that? I'm sorry, could you repeat why the second entry was safer to hold? Was it because price had already rebalanced after creating a market structure on a higher time frame? Yes, because the 5 minute, this is the important thing right here. Why is it safer to hold here? Okay, not safer, but why is it better if you are going to hold a position here long than here long? Because think about it. It's the exact same price, the exact same entry. But why is this second one better than the first one? Number one, it's not that this is better. It's not that the second one is better. The difference is you now have more information related to the model. Again, when we talk about time and price, we talk about time and price with macros and time and price in relationship to the model. When we think of a market maker buy model, when do we expect to see efficient price action? We expect to see efficient price action when we've seen manipulation and we've seen distribution and we actually know where the draw on liquidity is. So, if this is what we're looking at, when do we expect to see quality move to this low? When this has happened, when this has happened, and when we're here. That is when we see fast moves. And when you also align this with possibly CRT, this becomes a candle. This becomes candle range theory. And then this is the inside range of whatever high just got taken. And then you're playing this as the range to go down. This becomes the third candle, which is the most expansion candle, which then becomes power of 3 on a bigger time frame. Oh my God, the things are starting to align. So now this becomes the expansion candle. And guess what time the third candle opens up? Most of the time, when you look back and when you're looking at CRT, it opens here in an area in which we already expect to reject because time and price align in relationship to the model. Because we already expect that's what the market to do because that's how the algorithm runs. So when I say be an observer, this is what I mean. The market will go when it's supposed to. You know what it is. You have the models. You understand. You just need to see it happen more and more and more. And when you see it happen more and more and more, it's going to fucking mind boggle you how precise it is. So this is where we expect price to continue. Not here. This is just the displacement move, but after the rebalance. So why is this better? Because it's after this move, after the displacement, which then sparks the buy model. Does that make sense? Price rarely shoots straight to the drawn liquidity unless timing is spot on and everything else has happened to send it. Most of the time, you can expect a retrace to equilibrium or some other PD array before heading higher. Very important to remember. Yes, absolutely. I'm rewatching this session for more confirmation. I highly, highly recommend to rewatch this session because there's some yapping gems on this. So on market maker sell model, market maker buy model, do you always expect the price to rebalance back or to create a turtle swoop? Yes. Yes. Always. Every single time. there will be at least an initial rebalance unless there is news. Unless there is news. That is different. For example, this is a buy model, but it is one candle. But did it offer? Yes. It rebalanced. But then news opened up, and it was one candle. So that's the only really exception. But any other model, yes, you will either see a rebalance or a turtle soup. Justin, from 10 to 10:20, it looks like a buy model, and the buy model seems completed at 10:20. How do you know it's going to bounce on at the order block? From 10 to 10:20. From 10 to 10:20. From 10 to 10:20, it looks like a buy model, and the buy model seems complete at 10:20. How do you know it's going to bounce at the order block? Are you saying this right here? This buy model? The internal buy model? Yes, okay. Great question. So, how do we know price is going to bounce at the order block? Which order block? This one? At 10:22. I don't care about this. 10:22. This is done. Oh, are you saying this buy? Okay, wait. Yes, there was two. No, there's two. There's two good ones. This and this. These are two different trades though. Two different trades, two different models. Keep that in mind. These are two different models. These are two different models. This is a model in its own. This is a different entry. That is in relationship to this. And there was an, I'm pretty sure there's an SMT here, no? Oh, this is the one. This is why I was skeptical, is because ES created those equal lows. Okay, so two entries here. What's this first entry? Sell side taken, internal sell side taken. This fair value gap gets ran through, generated buy side liquidity. Also, I believe this was a CRT candle. Let me confirm. It was not a CRT candle. Oh. No, it was not. I take it back. Yeah, because that first initial candle was the news candle, so never mind. Let me zoom in here. Okay. So, let me zoom in even more here, because you'll be able to actually see the actual buy model if I could zoom in, because price is fractal. So I'm going to like a 5-second. Okay. Comes a lot clearer now, huh? What's going on here? Sell side taken. This low to the left of us taken as well. What's happening here? This is initial entry, early. I would not take this. I would wait for this displacement. We now have a market structure shift. Where do we rebalance to? The recent high. Order block. We bounce. We run all of this generated buy sell liquidity. So now this is different. Why is this different? Because this move, once this is complete, this is a buy model in itself, but this move then causes a change in the state of delivery. Which then, when we come back down, ES is now in this order, in this fair value gap. And now that both of these lows have been swept, I expect this order block to hold to rebalance price. So the entry I wanted to take here was a scalp. Let me zoom in. Normally when we have a move like this, let me draw it out. When we have a move like this, you most of the time never see this happen. That was a bad example. Let me fucking put this up here. Hold up. Now, this does happen sometimes, but if this does happen, the drawn liquidity is higher. Keep that in mind. Keep that in mind. When this does happen, this can happen because the drawn liquidity is higher, meaning we are drawing towards this high. If we take this internal high, come down, sweep the internal low, and then continue the trend because we're drawing towards the high. If the draw on liquidity is here, what's most likely to happen? Something like this. Or manipulation, again, another manipulation candle, and then a sell-off. So now, when I'm watching to see the reaction, because that's what I'm looking for, I'm watching to see the reaction. We're in OTE of this range. Once I see initial bounce, order flow holding, bullish imbalance, holds, expansion, this is when I know we're going to run to this high. And I was looking to take a long to run it to that high and then let a runner break through. But again, the biggest part of it is because the drawn liquidity is higher. Was cautious because of action. Higher time frame draw was bullish. Yeah, I don't see this. I don't see this. Again, this SMT here too. No, there's no trade there. Again, if you're taking this short, again, this is the problem. You're taking a short targeting fucking way down here. Why? This turtle soup has nothing to do with this low. This entry has nothing to do with this low. What would the turtle soup be if you're targeting this low? This high getting souped. This entire move would get souped. This entire range right here would get souped. This internal soup is just for this low and this low. But we don't go to this low because we have an SMT. So if you're taking this kind of soup, your target is this low. And when this low forms an SMT, you take it off. So guess what? Your entry is great, but why the fuck are you targeting down here? Has no relation. Does that make sense? That's very important. Yeah, that's why yeah, exactly. Okay. Orb strategy trade. Took a long trade on NQ, used ES as the confirmation. The moment I took the trade, ES had already confirmed bullish breakout to the initial 15-minute range candle, 9:30, 9:45 a.m. Eastern. Target for me was Asia high on NQ. Target hit within minutes of the breakout occurring. 15-minute ranges are marked with fib, high, mid, low lines in green, white, orange, respectively. Hopefully this is more clear. Let's take a look here. Initial 15-minute range of the day highlighted and marked. Wait. Took the long trade NQ as user confirmation. The moment I took the trade, ES had already confirmed bullish breakout of the initial 15-minute range. Target for me was Asia high on NQ. Target hit within 10 minutes of the breakout occurring. Wait. This range is already done, though. I think I might be misunderstanding the strategy. Not on NQ. What's the high on? Wait, let me see. Wicks don't count. I feel like that doesn't make sense. I feel like that doesn't make sense. I think of it as trading it as a CRT. And the strategy is basically trading the 15-minute candle open as CRT. That's the way that I was thinking about it. And I think that actually is kind of sick, kind of cool. Because basically 15-minute candle opens, high and low of the first 15-minute candle. Next one opens. We have something like this. And then when this candle opens in this range, let's say I zoom in, right? I'm like, okay, this candle opens at whatever time this is. I then zoom into like a 5-minute or no, not even a 5-minute, like a 1-minute, 15-second, 30-second. And then I trade this move. And then this is finished. And then again, it would also be like something like this too. That's how I was thinking about it. But this is what I'm backtesting. I'm watching this. I think this would be cool for the first 15 minutes and see how this plays out. Because like there's a lot of times where this literally happens all the time. Thoughts on this trade? Same thesis as you, but took a little earlier than you. SMT at the low day, manipulation at low, displacement for value gap entry, took small size because of the chop, took it off at break even after it failed to go higher. Yeah, just again, it's not. Two things. No displacement above this high. That's number one. No displacement above this high, so this kind of really wasn't a great entry. What time of day? Also, yeah, time of day is really, really whack here too. And overall, just chopping this. If I could give you any piece of advice when it comes to days like this, because I used to make the same problems. Again, look at this. Look at these executions, okay? This is how my trading goes. I trade the morning, either make money, make a small mistake, realize that price action is not what I want to see, or I'm okay. Let's dive into this. This is basically, I've never even kind of really thought about this before. Okay, let's go through my mental between the days. Throughout the day, let's talk about how my brain shifts. First of all, 9:30 to around 11 o'clock most of the time. 9:30 to 11 o'clock is my up and at it. This is when I'm either, no, I want to up and at it, no trade, initial win, initial loss, and then I step away. Now, in this area, basically how it goes is it's either if I take a win and I'm up good, a lot of the times I'll stop trading. So that's most of the time what happens is I'll take a trade in this range and they're in this time period. I'll be up, 1,000, 2,000, whatever it is, and I'll step away for the rest of the day and I won't trade. Or I'll take an initial win. Maybe I'm trading super low size and I'm, waiting for the market to the market's not giving me super high quality opportunity, but I know that there's a bias and I know that there could potentially be a good move because the market's setting up for it. So I'll take maybe a small win, maybe a small loss, and I'll step away. Okay? Very little times am I taking a big loss here. The only times I should be taking a big loss here is if it is a high-quality setup, I pyramid into it, and I get stopped out. That is it. That is the only time I should be having a bad loss. Other than that, in this time, it's basically small little losses, small little wins, big wins. That's it. I mean, that should be really all the time. Then, from here, 11 to around 12:30, I would say 12:30 to 1 o'clock is normally when I'll if I am going to look at the PM session, it's normally around here. So this is when I come back and I start re-looking at the market. If I am, some days I'm not, sometimes I am. It really depends. This is when I come back and look at the market. Could you take trades here in this area? Yes, you can. Do I recommend it? Meh. It's kind of up. It depends on the day. It depends on a lot of different things. This is always going to be lower probability though. PM session opens normally time 1 o'clock. I normally will be looking at 12:30 to 1:30 around there. This is when I come back. Now, depending on how the first session went, this is basically how I view it. There's 2 sessions in a day for me. There's AM and there's PM. A lot of the times I don't even get to PM because I do well in the AM, and there's no reason for me to trade PM. Why do you think I don't trade PM if I do well in the AM? Why do you think that is? Take a moment and think about that. Why do you think that is? The reason most of the time I don't trade PM when I take a win, if I'm up around $1,000, $2,000, is because when I go into a PM session, knowing I'm up already on the day, it inflicts me to make more emotional decisions. But I'm in a range. A lot of the times it doesn't affect me anymore. A lot of the times, if I'm being completely honest, it really doesn't matter right now where I am. But this is how most of the time it used to be for me. Now, it really doesn't affect me. I could be down $5,000. I could be up $5,000. And I can take a trade, and it still doesn't matter because every trade now in my head is a completely new experience, and that's just where I'm at my trading. But before, this is what I highly recommend, is being aware of how your decision-making changes based off of the position that you're in. If you go into the morning, and you think about it this way. Let's say I give you 2 positions. You're in 2 situations. Which one do you think you're going to trade better in? One morning, you come into the day, you take 2 wins, you're up $1,000, and you go into the PM session. Another day, you go into the morning, you take 2 dumb losses, and then miss out on a potential trade because you didn't have the conviction to take it. How do you think you're going to trade in the PM session? You're trading the exact same session with the PM session, but you had two different scenarios in environments leading up to that. Now, if you don't have the experience, you're going to make emotional decisions because you're going to be trying to make that money back. You're going to be trying to make more money, fear, greed, all that stuff. Once you flush all that out and you realize that's all just noise and you can get past that with trading, that is when it starts becoming more fun, because then you're actually trading concepts. You're trading ideas. You're trading a system. You're trading like actual reality and not based off of emotion. So yeah, I'm kind of just going on yapping right now. So I'll stop it here right now. So any questions that you guys got for me? So would you say difference in my trades and yours was time and day, no real displacement for mine? Yes, that's exactly what I'll say. And as long as you manage risk, Amir, too, it's fine. If you took it off a break even, that's a great trade. Because again, even when you make a mistake, your risk still protects you. And that's how it should be. This charting session has been fire. Much love. Appreciate it. Hope you guys have been learning. Have you guys enjoyed this session so far? How we feel? We got a lot of knowledge tonight. Good, good, good. All right, guys. That is all I have for you guys tonight. Enjoy the rest of your night. I will be live trading tomorrow on YouTube. I will be still in the Discord with you guys, but I'm going to go live on YouTube as well. We'll see how it goes. Hopefully we get some good trades. Hopefully we get some good opportunity. I'll post this charting session for you guys. Enjoy the rest of your night. I will see you all tomorrow. Peace out.